Welcome to the end. My name is John Folks. I'm the Vice President of Corporate Development. Thank you to One for inviting us all out here and putting on a truly world-class event. A lot of what I'm going to say is pure speculation, both on the commodity front and on what I think our projects may yield. But I think it's worth pointing out that we do a great deal of due diligence before anything makes it onto a slide on here. My research into the battery metal space, specifically regarding nickel over the last 3 years since we shut down operations on our Grisette nickel project, encompass a pile about 8 feet in total in my office. And we're pretty careful about saying something's going to happen on this front before it actually does. So who is Balmoral? For those of you who don't know us, we are a purely Canadian, purely exploration stage company. We have two main assets, our Martiniere gold system, a 644,000 ounce high-grade vein-hosted system on the western part of our property with a shallow open pit and a high-grade underground running about 4.5 grams. We published a maiden resource on Martiniere back in March of this year, and subsequently, faced with a significant cost to continue to drill it to depth, we have since put it on hold and are pursuing a partner to continue the exploration and delineation and growth of that asset. So now we find ourselves returning to Grisette now that the nickel price has recovered significantly since we walked away from it in 2015. And the focus of our company now is to take Grisette as an asset, move it to critical mass size for a standalone mine, enter the engineering phase for Grisette, and at the same time put together a portfolio of nickel, copper, cobalt assets in time for the electric vehicle demand for nickel to really kick off in 2019, 2020. So what I'm going to do is I'm going to spend most of my time talking about the case for Class 1 nickel, nickel's role in the electric vehicle revolution in the cathode of lithium-ion batteries, because I think it's one of the metals that's poorly understood and poorly recognized. So electric vehicles are coming. Parabolic growth has almost inarguably begun. And it's important to note that this is not coming because the cost parity has reached with internal combustion engines. It's not coming because there's charging stations in everybody's home. It's coming well before a lot of the hurdles to electric vehicle adoption are coming. The reason it's coming is because of Europe and China and not the United States. When I do this presentation in any North American city, the feedback I get is, it's not coming. I haven't seen more than a couple of Teslas in my neighborhood. This isn't happening. You can compare this to if you want to buy a car in Shanghai. You put down a $10,000 to $15,000 deposit. You enter a lottery. You have a 1% to 2% chance of being drawn for a car, and then you have to pay the equivalent of $80,000 to $90,000 for that internal combustion vehicle. You compare that to an electric vehicle, you simply go to the store and buy one. Those are the type of governmental incentives that are driving the growth in China. China and Europe are leading the way on this. A sense of scale is important when talking about the metal consumption for electric vehicles. This is a shocking graph to me. What this shows you is that in 2017, with only 2.5 million electric vehicles on the road, the combined lithium-ion battery capacity of those vehicles surpassed 12 billion consumer electronics, cars, laptops, and tablets. This is at 0.4% saturation for electric vehicles out of a total fleet of, it's actually 0.25% saturation out of a total fleet of 1 billion vehicles compared to about 80–90% saturation for something like cell phones. So it is going to consume an enormous amount of battery power, an enormous amount of raw materials. The numbers of those raw materials are staggering. This year, about 200,000 tons of raw materials were used for lithium-ion batteries. That's going to jump to 2.6 million tons in the next 7 years. And in the next 12 years, that'll jump to over 7.2 million tons of material. And obviously, we know this story. The real key here is the non-no-brainer ones, the nickel, the graphite, the cobalt, the manganese. How much of these are going to be used? Nickel is going to be dominant. The two biggest battery technologies that are being used right now are NCA, which is used in the Tesla Model 3, and the NMC, which is used in pretty much all Chinese and European electric vehicles. LFP, lithium iron phosphate, is still used, but because of the lower energy density and the greater range required, those are switching over to NMC batteries right now. And because of problems with cobalt is being thrifted dramatically, and this is obviously something that people are talking about a lot. What they don't talk about is that it's being replaced with nickel. And of course, you got to look to tomorrow. From what I've found from a great deal of research, going to companies like Nano One Technologies, going to companies like BASF and Bosch, solid state batteries appear to be what the lab is building for 2025 to 2045, 2035, 2045. Solid state batteries will have likely a solid lithium anode, and the best that I can come up with, I can't get solid numbers, but the cathode will likely be what we call a heavy nickel cathode. Now, it's also important to point out these are structurally stable already, so the role of cobalt in these batteries is much, much less. So what does that mean? It means that we're currently sitting with really 50 to 60% of the cathode of an electric vehicle lithium-ion battery, and 90% of the cars around the world are nickel. And by 2027, 2029, you're looking at the 811s coming on stream dramatically. You're looking at 80% plus. Worth pointing out the very narrow part of the blue part of that graph, that's the Tesla Model 3. It's already 87% nickel in the cathode and 3% cobalt. So nickel has a future all the way through early stage lithium ion, advanced lithium ion, and all the way into solid state batteries. It's a story that just gets better and better. And there's a couple kickers. Number one, only half of the world's nickel production can currently be used to create the nickel sulfate hexahydrate for the cathodes of these batteries. Sulfide nickel and very select HPAL operations that convert laterite into class 1 nickel can currently be used. Some of this laterite material at much higher prices will attract the capital, likely from China into Indonesia, to convert into battery metal material, but it's going to take billions of dollars of capital cost and probably 5 to 7 years to get this going. In the meantime, projects like ours, sulfide nickel projects, Australian nickel projects, Russian nickel projects, that will be the domain of, they will control the electric vehicle demand. And as you can see, inventories that peaked in 2014 at over 500,000 tons of visible stocks have now dropped well below 300,000 tons. So it's coming. Not a lot of people are talking about it, but it's coming. I have 2 minutes and 40 seconds to go over our project, so I'll do my best. So the Grisette nickel copper cobalt project, we discovered this in 2014 at $6 nickel. We drilled half of the holes into it up to $9 nickel in late 2014, early 2015. This project carried a $200 million market cap in late 2015 when nickel prices peaked about $9. We continued to drill it. We got up to hole 99 by the end of 2015 when nickel prices were $3.50 a pound. We then suspended operations, did our metallurgy, got beautiful metallurgical recovery, and published an initial resource. The initial resource is 3.5 million tons at about 1.6% nickel or 1.8% nickel equivalent. The grade is there, the infrastructure is there, the metallurgy is there. All we need for this thing is size. If you take the nickel price, bump it up to $7, $8, you're looking at closer to 103,000 tons of contained nickel. Critical mass for a project in North America with 80 meters of overburden, underground nickel mine, you're looking at, you need somewhere between 100 to 200,000 tons of contained nickel. 10 years of 10,000 tons or 10 years of 20,000 tons would be a great standalone nickel mine. We're currently sitting at between 55 and 100, depending on the nickel price. At today's nickel prices, we're looking at 55, and that's what we're basing it on. We're not counting on the nickel price getting us there. So we have 6 ways of going from 55 to over 100. Number one, pick up where we left off in 2015. In 2015, we put out one of the top 5 drill intercepts in the last 10 years in North American nickel, 7.5 meters of almost 12% nickel equivalent at the very bottom of our project. The market cap dropped 22% that day. I had about 85 people ask me to take them off the email list and about 300 angry phone calls. We are now drilling this area. We've completed 4 holes, and the first 3 we've announced we've intersected sulfides. So stay tuned for results from this. Number 2, other discoveries in the belt. We've gotten 5 other nickel sulfide discoveries in the belt, which have better initial nickel sulfide numbers than the initial discovery hole at Grisette. And it's important to remember that Grisette took a half a dozen holes to actually vector in and find the main deposit. So we now have a second drill operational here right now. We're vectoring in on these discoveries, the best ones, and hopefully we'll put a new discovery in the box with this program as well. We're not stopping there. We're putting together a portfolio of multi-stage, multi-asset nickel, copper, cobalt projects in North America. We want to be the investment vehicle of choice for nickel when electric vehicle demand kicks in, and ultimately, we want to be a consolidated package for acquisition when companies like Glencore, Vale, Sherritt, Lundin are looking to expand beyond their existing operations. Thank you.